Hey everyone, welcome back to the channel. Today we're diving into a stock that has been making waves, sparking debates, and leaving a lot of investors scratching their heads. I'm talking about Bigbear.Ai, ticker symbol BBAI. This company's stock has had a roller coaster of a year. Earlier, it surged past the $10 mark, giving investors a taste of what looked like an AI-fueled rocket ship. But the excitement didn't last. Over the last month, I learned the stock has plummeted by nearly 30%, now trading just under $5. Still, before you write them off, remember this big bear is still sitting on an impressive 270% year-over-year gain. So here's the million-dollar question. Is this just another case of AI hype followed by disappointment, or is Big Bear actually laying the foundation for a billion-dollar business? On the surface, the story sounds exciting. Big Bear isn't one of those "someday we'll figure it out" AI companies. They actually own TrueFace, a facial recognition system capable of matching someone in under 2 milliseconds. That's faster than the blink of an eye. This technology isn't theoretical, it's already being used. For example, Veriskin, one of Big Bear's solutions, is running in airports to move thousands of passengers per hour. And it doesn't stop there. The U.S. Department of Defense, the NSA, and even the Air Force are signing contracts with them. So far, so good, right? But here's where the story gets messy. Let's talk numbers. In their most recent quarterly report, revenue fell 18% year over year, sliding to $32.5 million. And the losses? Well, they didn't just creep up, they exploded by more than 1,400%, reaching nearly $229 million. That's not a small dip, that's a crater. Yet, despite these brutal numbers, the market is still valuing Big Bear at a price-to-sales ratio of over 11.5. Put differently, investors are paying about $11.55 for every $1 in sales. That's more than double the valuation of some peers like C3.ai and way above traditional defense contractors such as KBR. This tells us something important. Wall Street isn't valuing Big Bear based on what it is today, but on what it might become tomorrow. Investors are betting on massive future growth, which brings us back to the central question. Can Big Bear actually deliver? Or are we looking at another ticking time bomb in the AI space? Now, here's a detail most people are overlooking: Big Bear's recent NFL partnership. Their name is now on the Washington Commanders training facility. At first glance, that might just seem like a flashy marketing stunt, but I think it signals something bigger. Big Bear is trying to break out of its reputation as a behind-the-scenes defense contractor and push into mainstream recognition. When your company's name is plastered across jerseys, training centers, and stadium suites, you're no longer just selling software, you're building a brand. So in this video, let's break it all down. We'll talk about Big Bear's contracts, its growth potential, the risks lurking in the shadows, and whether this stock is an overlooked tech giant in the making or just another name that rode the AI hype cycle too far, too fast. What does Bigbear.ai actually do? Bigbear.ai describes itself as a decision intelligence provider. That means it builds software that helps organizations from defense agencies to manufacturers analyze enormous amounts of data and make smarter, faster, mission-critical decisions. Think of it as trying to build the brain behind next-generation operations. One of their crown jewels is TrueFace, the facial recognition system I mentioned earlier. It can identify individuals one-to-one or one-to-many against a gallery of faces in just 2 milliseconds. That speed and accuracy could redefine how security systems are designed in the future. If governments and corporations adopt this at scale, we could be looking at a technology that becomes as common as fingerprint scanners are today. Then there's Veriskin, which is aimed specifically at airports. Using advanced computer vision, it streamlines traveler verification while maintaining speed and security. Picture thousands of passengers moving through an airport every hour. Every second saved means less waiting, more efficiency, tighter security, and ultimately, happier travelers. If Big Bear can dominate this sector, they could become the global standard for air travel security. And we can't ignore the defense side. Big Bear already has contracts with the Department of Defense, NSA, and U.S. Air Force. That's a huge deal. Government contracts are not only prestigious, they're often sticky. Once you're embedded in national defense systems, it's very hard to replace you. That kind of credibility makes Big Bear far more than a science project. The financial picture. But now, we need to return to reality. Despite all these exciting projects, the financials paint a worrying picture. After a strong rally that sent the stock soaring earlier this year, shares have now slipped back to just under $5. That's a nearly 30% monthly decline. Still, on a yearly basis, they're up close to 270%. Here's the problem. Their price-to-sales ratio is 11.55. That's higher than many of its peers. Investors are essentially paying a premium today for growth that hasn't yet materialized. Compare that to companies like C3.ai at around 5.3, or defense contractors like KBR at under 1. Even Palantir, often criticized for its lofty valuation, earns that premium because it's growing fast and profitable. Big Bear doesn't have that luxury yet. Their Q2 2025 numbers showed revenue down to $32.5 million from $39.8 million a year earlier, largely due to reduced activity in Army programs. Losses ballooned to $228.6 million. Management has guided full-year revenue between $125 million and $140 million, but that's still uncertain. Like many early-stage tech companies, Big Bear funds operations through debt and equity financing. Management insists they have enough cash flow to operate over the next 12 months, but that's a tight window. Unless the revenue engine kicks into gear soon, time is not on their side. What could push the stock higher? There are a few catalysts worth watching. First, that NFL deal. Big Bear's name now stretches beyond defense circles into mainstream America. This is more than advertising, it's a strategic push to build credibility and recognition with consumers and businesses alike. Second, their new cargo security solution. Partnering with international trade organizations, they've launched a project in Panama, one of the world's busiest shipping hubs. The system integrates biometric checks, real-time monitoring, and centralized oversight to keep supply chains transparent and secure. If this scales, Big Bear could carve out a lucrative niche in global trade security. These moves show that the company is actively expanding beyond just defense contracts into commercial and consumer-facing industries. If even a fraction of these bets pay off, the revenue picture could improve dramatically. The risks. But before we all get carried away, let's not ignore the risks. The biggest issue? Over-reliance on government contracts. When Big Bear mentioned uncertainty in Army programs in their Q2 filing, that raised eyebrows. Government budgets shift all the time. A delay or cancellation in just one contract can send revenue tumbling. Second, despite promising technology, profitability is nowhere in sight. Losses are widening, and unless management can control costs or land much larger deals, the financial bleeding may continue. Third, investor expectations may already be too high. With such a steep price-to-sales multiple, any stumble could send the stock plunging further. Where does Wall Street stand? Analysts currently rate Big Bear as a moderate buy, with a price target around $8. From today's price near $5, that suggests roughly 60% upside. From a technical perspective, the stock is approaching oversold levels on the RSI and has a support line at about $4.08. The $6.20, $6.80 range is now a key resistance zone. In other words, the stock could bounce, but it's still high-risk territory. Final thoughts. So where does that leave us? Bigbear.ai is a classic high-risk, high-reward play. On one hand, they have cutting-edge technology, real government contracts, and bold expansion plans into commercial markets. On the other hand, they're bleeding money, struggling with revenue declines, and trading at a valuation that assumes big growth. If you believe in their long-term vision, maybe it's worth taking a small speculative position. But remember, AI hype can make you rich, or it can burn you. The market doesn't care about your excitement. So I want to hear from you. Do you think Big Bear is the next Palantir, a future tech powerhouse, or is this just another overhyped stock headed for disappointment? Drop your thoughts in the comments. This is not financial advice.